I wonder, Ivory, is anybody immune? Are any companies immune to this, and are they the ones worth investing in right now?
No, I think the supply chain issue that you mentioned is going to affect corporations, not just the raw material ingredients, but also we've had, wage growth. I know real wage growth is negative, but employment expenses are high. I think, the consumer staples, obviously the utilities should do a little bit better because they're more of a defensive position. But I think, we're seeing the consumers now, and consumer spending is 70% of GDP, but they've been facing higher inflation in oil and gas prices as well as food. And that's going to affect earnings as well, especially what's happened over the last year.
They're spending these days, of course, discretionary is stuff that they spend on in droves for sure. Healthcare has also become a massive part of that spending picture and will become an even bigger part of that spending picture in the next 10, 20, 30 years for Americans. That's spending as well. How much of that do you think is behind this big healthcare trade that we've seen outperform now for the better part of the last 6 to 9 months?
Well, the reason the healthcare trade has worked is because it's a defensive position. If you need a prescription, you're likely going to fill it if you have the means. And I think the overriding concern is it's really the comps, because when we had the stimulus packages in March of 2020, that fueled a tremendous amount of earnings growth. And when you compare the year-over growth with second quarter 2020 with second quarter 2021, it looked really well. But the problem is you're now comparing that big growth, year-over-year growth from second quarter 2021 with what we saw in the last year. And that's not going to be as good. So the bar is just so much higher that when you start to compare earnings, it won't be as favorable. And so when you talk about they beat expectations, I imagine if somebody said, we think Ivory can run a 12-minute mile. Well, if I ran it in 10 minutes, doesn't mean I'm fleet of foot. It just means I walk really fast. And I think that's what we're going to start to see with earnings, that when you compare it, the year-over-year growth with the previous year, it won't look as good.
All right. So, Ivory, earlier this spring, you were telling us that you liked commodities, gold, all of those things. We know what they've done since this spring. Are commodities like gold, oil, elsewhere still where you want to put money given the pullback, or do you think we're in a decline now?
No. Because I also thought that inflation was decelerating. And so now you're starting to see that with copper and wheat and oil. So those commodities is probably, you want to be on the opposite side of that trade. Gold broke down in the beginning of this month, but on a relative basis, it's still outperforming the S&P 500 by a pretty wide margin. And if you had commodities and you timed it right, you did really well with that position. So those two positions on a relative basis significantly outperform the S&P 500. But right now, obviously, commodities is not the place to go. If oil would have to be $144 a barrel just to maintain the same pace of inflation. So those are two positions that I'd be careful about.